This is the story of the time I made so much money on a trade, I could barely hit the sell button because my hands were trembling so bad.
Beginning, middle, end. Facts, details, condense, plot, tell it.
Hi everyone, I'm Marc Lichtenfeld, best-selling author of Get Rich with Dividends, and I remember it like it was yesterday. It was more than 20 years ago. The Backstreet Boys ruled the Billboard 100 and the internet still looked like this. A bright-eyed and bushy-tailed Marc Lichtenfeld bought a call option on Sun Microsystems, a big player in the early days of the internet. Now these guys don't exist anymore, but it was a good time to be Sun Microsystems. When the next quarterly announcement rolled around, the company posted stronger than expected earnings and the stock jumped. Just like that, I was up $5,000. That may not sound like a lot to some of you high rollers, but I was only making about $45,000 a year at the time. This single trade was worth more than 10% of my entire gross income for the year.
I started from the bottom, now I'm here.
My hands were literally shaking when it was time to collect the profits. Now, I've made many times that figure on trades in the years since, but my hand doesn't shake anymore.
Look at that.
Steady as a rock.
Yeah, but I shoot with this hand.
I guess it hits different when you realize you can keep doing this again and again and again and again and again and again and again. I experimented with lots of different types of options trades in the years since, as young people are wont to do. But recently, the State of the Market Gremlins conducted a study of every option recommendation I've made over the past 15 years. They revealed that the majority of my triple-digit winners, meaning gains of 100% or more, came from penny options. Now, penny options are what I call options that trade for less than $5. But I want to be absolutely clear here. I am not talking about penny stocks. Penny stocks are mostly garbage companies with stocks that are easily manipulated. I don't trade penny stocks.
Yeah, they're penny stocks. Companies that can't get listed on NASDAQ, they don't have enough capital.
What I'm talking about are cheap options on quality companies. That's a very important difference. For example, earlier this year, I banked a 398% gain on a $2.85 call on Semiconductor. This is a $20 billion market cap company with $7 billion in annual sales, hardly a penny stock. In fact, the biggest win of my career was one of these penny options. I recommended a call on pharma giant AbbVie for $1.18. We sold pieces of the position all the way up, but the last piece was sold at $29.28. That's a 2,381% gain. As I explained in last week's video, these inexpensive options can reduce your risk by lowering the amount of capital in a position while giving you the same or even more upside potential. But there's more to trading penny options than low prices. The main thing I look for is low volatility, because when stocks are quiet, their options are cheaper. Despite the price, in fact, because of it, options bought at low volatility hold potential for explosive growth. You see, when the stock goes up, so does the price of our option, but as the stock grows, volatility can increase, which pushes the price of our option up even more. A spike in volatility is like injecting nitrous into your engine mid-race. The gas makes the car go, but the nitrous makes it go. Now, I'm not going to lie, this is a tough market right now, but you can still make money. The key is to reduce your risk and buy assets that are cheap, but won't stay that way for long. Penny options, not penny stocks,
and I cannot stress this enough,
can do just that. For more information, click the link in the description below and sign up for my Penny Options Summit at this free online event. I'm giving away the details on the top penny options opportunity that I'm watching right now. I'll see you next week. I'm Marc Lichtenfeld. Thanks for watching.